Welcome, ladies and gentlemen. My name is Ryan Turbo Jackson. I am your insurance resource, and in videos like this, I like to break down insurance coverages, language, all things insurance, because 98% of the people, I would guess, really don't know what they're buying. And if they do, are you really buying what's right for you and your family? So that's where I come in. I am your insurance resource. Insurance is its own language, so let me help you. Last week I did a video on new home buyers, and I will link it right up here, over here. So if you are a new home buyer, go ahead and check that out. But this week we're going to be talking about your forever home. And what do I mean by forever home? Well, we've all been there. We've bought our starter house, whether we were single, recently married with no kids. Next thing you know, life happens. We have 1, 2, 3 kids. Next thing you know, we're outgrowing that house. We're looking for our forever home. And a good friend of mine, Johnny Fowler, uses a stat that says, especially nowadays, folks move every 7 years on average, just because their circumstances change. Their family changes. Everything around them is in constant motion. And especially in this day and age where it is, especially my generation, we look more to purchase something new that fits us better rather than try to make what we have work for us. So that's where this video is going to come in. I'm going to give you the top 10 the top 10 frequently asked questions for people that are upgrading their home, because once you upgrade, things become more expensive. We want to make sure that your insurance policy grows with you, so that you're obviously insuring your greatest investment. So let's start off with the first one here, ladies and gentlemen. How to insure your personal property. Now this is a big one, because not only is your home upgrading, but like I said, maybe you've gotten married. We have wedding rings, engagement rings. As we grow older, we inherit things from our parents, to where it would be not only do we absolutely need our personal property covered on a replacement cost basis, but we also might want to look into scheduling things like jewelry, collections, antiques, things of that nature, because not only is it a better, more robust coverage, because a lot of times it comes with a $0 or a lower dollar deductible than your base home policy, but it actually enhances the coverage of those things. So just something to keep in mind, because and it's relatively inexpensive to do, as compared to trying to replace things like that. Question number 2, finished basements. I mean, this is a huge one. One of the reasons that you might want to purchase a larger home is that you're looking to entertain. And when a lot of times, especially here in Michigan and in the Midwest, when we were all kids, that there was always that one parent's house that had the finished basement that we were always over at. Well, if you want that to be your home, you want to make sure that basement is covered. We want to make sure it's covered from not only water seepage and leakage, but also sewer backup. So that's where you want to make sure that not only you have water and sewer backup, but you want to make sure that that there's enough coverage for it. When I first started in this business, we usually traditionally put $5,000 worth of water backup coverage. Well, now, according to my friends over at ServPro, it cost almost $5,000 just to remove the water and or sewage from a basement. That's just removing it. That's not repairing drywall, flooring, replacing anything that of value that was damaged during the occurrence. So make sure that as the amenities of your basement enhances, make sure that the coverage of your water backup and sewer backup increases with you. Number 3, trampolines and pools. This is something that is, and one of the reasons I bring this up is some companies don't insure or have a surcharge or have certain rules when it comes to trampolines and pools, in particularly pools. Now, trampolines, yes, there might be a surcharge, and they might require the netting around it. Other than that, that's pretty cut and dry. Some companies don't allow them at all. But when it comes to pools, is it a above ground pool? Is it a below or in-ground pool? Does it have a diving board? Does it have a slide? And more importantly, does it have a fence around it? And you might be asking, well, why is this all important? Well, it's not so much the coverage. If something were to happen to the pool or the trampoline, but the liability when it comes to it. You can imagine kids jumping on your trampoline. It's not 9 times out of 10. It's not just going to be your kids that are on the trampoline. The neighbor kids are going to come over. Your nephews, insert name of child here, is going to come over and play with your kids. Same thing goes with the pool, and especially if you have little kids, huge liability risk to have or little kid neighbors or anywhere around you that could wander onto your property and accidentally fall into your pool. So that is a huge concern. So if the home that you're looking to purchase does have one of these, make sure you check with your agent to see what your company's rules and kind of regulations and everything are when it comes to pools and trampolines. Number 4, high value. High value. Now this is something that I could and have done total videos around. But what makes a home high value? And that is it's very company dependent. And if you refer back to last week's video when I talked about replacement cost, most of the time there's a threshold at which a company, if the replacement cost of a home is above this mark, then it's considered high value. It's not, and a lot of it has to do with the square footage, the amenities, the fit and fixtures of the home. So, for instance, auto owners, one of the companies that I work with, anything over $750,000 is considered high value. Now, is it rated different? No, but there are certain coverages that get enhanced once that threshold is met. We talked about the water and sewer backup coverage. Most companies have a max of like $25,000 to $50,000. Once you reach that high value threshold, those coverages enhance and increase to where, because the home is valued at so much, we want to make, obviously, if the fit and fixtures are upstairs, they're probably going to go downstairs as well. So you want to make sure that coverage is sufficient. And I highly recommend, if you are looking at purchasing a home that you might think would be high value, speak to an agent that has experience dealing with high value homes. This is something early on in my career I got in way over my head, and now that I've dealt with quite a few of them, I kind of know what's going on, and I'm better prepared to offer a potential client a policy, knowing that because it is high value, 9 times out of 10 there's certain things that they're looking for, and I can more easily give them what they need for that situation. So highly suggest when it comes to high value. All right, I skipped one. Number 5, do I need flood insurance? And actually, I was going to add this to the rundown last week, just because it's first time home buyers, and a lot of times this might be something that you would run into, and in particular in this area. And this is something that I have been adamant about. I've stood on my head with a lot of this, and FEMA has redone a lot of the flood maps around here. Now, to answer the question right out the gate, is it required? Yes and no. Yes and no. From an insurance side, from the insurance side, is flood insurance required? No. On the mortgage side, if your home is deemed in a flood zone, then your mortgage company might require you to carry flood insurance. There's no ifs, ands, or buts around it. But the good part is that now, as compared to like 5 or 6 years ago, more mortgage companies are open to private flood insurance, to where A, it's better coverage, and B, it's a heck of a lot cheaper. But let's say that you want to be proactive and your home is not in a flood zone, then to get a flood policy is very inexpensive. And on the plus side, if your home is deemed in a flood zone later on, that rate is guaranteed. It'll be grandfathered in. And another bonus note is that if you do purchase the flood coverage, you can actually sell that policy with the home when you sell it, because flood insurance is one of the only insurance products that does not go by your credit score, your insurance history. It doesn't require a name, or it doesn't go by a name, birth date, and address. It just goes by the address. So it can be an asset if you think about it that way. All right, number 6, is the home you're purchasing a secondary or seasonal home? Now, this is something that I know is kind of going off track as far as the forever home, but a lot of times your second home, especially nowadays, your second home is a secondary or seasonal home. So make sure, if that is the case, that you're communicating with your agent to let them know which property is going to be your primary, which property is going to be your secondary or seasonal. Are the coverages the same? Yes. It's just that we want to know where you're spending most of your time, and just so we can deem one a primary, one a secondary or seasonal. So is it a big deal? No. But is it something that you need to communicate? Yes, because your secondary seasonal home is rated differently than your primary home, just because you spend more time at your primary home. So that's kind of where that comes in. All right, we did that one. Refund from old policy. This is something that I myself came across here recently when I changed insurance companies, and this isn't just so. Let me take a step back and kind of paint the picture here. You sell your old home, you buy a new one. The old policy from your old home has to be canceled and a new one started. Now, if you're escrowing your insurance, there will be some sort of refund from the old policy, unless on the rare occurrence that you cancel on your renewal date and your new one picks up right on that renewal date, which happens. Is it likely? Probably not. There's probably going to be some leftover premium from the prior policy. I always tell folks, whoever your lender is, reach out to them before you even cash the check to see what they suggest doing with it. Because what you don't want to do is cash the check and then just spend the money, because your next policy is going to, or your next mortgage, once it comes, it runs its cycle, you're going to have to pay that back. You're going to have to pay it back. So you might as well get a hold of your lender, like, hey, this is what happened. What do I do with it? They'll lead you in the right direction, because the last thing you want to do is paying twice or cashing that check and spending it when you should be putting it back into your escrow. Number 8 kind of got cut off here. What about boats, snowmobiles, toys, and tractors? These are all things that a lot of companies will let us add to your home policy. And like I said, as your home needs grow, your family grows, let's say the property grows. You go from living in town to a lot or 2 lots. Next thing you know, you have 4 or 5 acres. You're like, man, it'd really be cool to get some quads or a side-by-side, which side-by-sides are a whole different thing, but some snowmobiles, any kind of toys to help you enjoy the property. Or, like I said, tractors, and I'm not really saying like a farm tractor, but something, like a small tractor to help with maintenance on the property. These can all, and again, this is company specific, but most of the companies that I work with will just let us add that onto your home policy, especially if there's a lender, because they're going to want to see a policy in place for such things with them added as a named insured, or an additional named insured. So yes, that is totally possible, and like I said, it's very company dependent. So make sure if you are purchasing these things, to let your agent know, so they can make the appropriate changes for you. Number 9, at-home businesses. At-home businesses. This is a very, very hot button topic right now, because it seems like everyone has a side hustle, everyone has a side income. So let's say with this new forever home purchase that either you or your husband or your significant other want a home office. How is that, and is it being used for, are they working for an employer? Are they working for themselves? Again, this is very company dependent, so it's something you're going to have to be in contact with your agent with to see, is my little side hustle or any other sort of business. Let's say you cut hair, you do upholstery. There's any other. Just think of anyone that you know that has an at-home business. And if you upgrade your home to a farm, then we're talking about a whole other policy. So kind of keep that in mind as well. I just consider farm a business, so kind of keep that's how I kind of keep them straight. So this is something again that you have to communicate with your agent, because there's a lot of criteria that might take your at-home business to where it outgrows your homeowner's policy and needs to be written commercially. So kind of keep that in mind as well. And I'm by all means, I'm not hating on side hustles. I'm not hating on your side gig. I just want to make sure that if something happens, there's coverage for you, your family, and to make sure that the policy you're in is where you need to be. And number 10, let's talk about discounts. I've never not had anyone excited to talk about discounts, and they're and again, very company dependent, but kind of the big ones: multi-policy discounts, home and auto, guaranteed discount. Now, one of the things that as you want to consider as your family grows, as your net worth grows, as your as your assets grow, is an umbrella policy. I just wrote one I'm writing one for a couple today that the discounts on their home and auto paid for $1 million umbrella policy. So having the 3 policies together was cheaper than just having 2, and they get an extra $1 million worth of liability coverage. So please talk to your agent, because these are available. They are rather inexpensive, and one of my first sales trainers said the reason you want to push these is he's like, me personally, I would much rather write the insurance company a check for $200 a year as opposed to trying to write $1 million check to someone personally. I'd rather let the insurance company write that $1 million check for me. So very, 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 very important. And just talk to your agent. If you have a college degree, some companies give discounts. If you're a member of a credit union, if you're a member of there's any number of professional organizations. So usually there's a discount. We can almost find a discount for almost everybody. But yeah, and again, another big one is life insurance. If you guys and gals have younger kids, getting set up with a $25,000 children's life policy is extremely easy, extremely inexpensive. It grows with them. So, and again, a lot of times with the discounts are completely free. So yes, open that line of communication with your agent. So that is it, ladies and gentlemen. That is my top 10 most frequently asked questions for forever home buyers. If you guys and gals have any questions for me, you can find me on Facebook. Here is my office number and my direct email. I'll give you a chance to screenshot this. And if you are going along in the home buying process and you really haven't gotten started, but you really want to look into that forever home, reach out to me. I have an army of real estate agents and an army of lenders ready to go to help you out. And even better, myself and those 2 other people work hand in hand together as a team flawlessly. So we are more than ready to help you and your family in your new home purchase. So with that, ladies and gentlemen, I will see you next week for part 3 when we talk about investment properties.